Namaste and welcome to this episode on Union Budget presented by Finance Minister Srimati Nirmala Sitharaman. Today we are diving deep into the latest Union Budget. Whether you are a practicing chartered accountant, a practicing advocate or an SME business owner, this video is crafted specifically for you. We break down the key highlights, new policies and their implications on your profession and business. So let's get started. The Union Budget is an annual financial statement presented by the government outlining its revenue and expenditure plan for the upcoming year, and it's as usual like we do in our business. Understanding the budget is crucial for any individual, businesses and economy as a whole. First, let's begin with overview of the budget. This year's Union Budget was presented on July 23rd, 2024 by Finance Minister Nirmala Sitharaman. And this focuses on four major categories: Garib, Mahila, Yuva and Annadata. Poor, women, youth and farmer. All these were addressed as the caste. You got focused during this budget. This budget was presented as roadmap for pursuit of Viksit Bharat and Developed India. Budget theme for this year focuses on employment, skill, MSME and middle class. Finance Minister Sitharaman projects financial year 25 fiscal deficit at 4.9% of GDP as against 5.1% in the interim budget. She says government is committed to reduce deficit below 4.5% next year. Expenditure for financial year 25 projected is rupees 48.21 lakhs crore rupees and receipt for financial year 25 is 32.07 lakhs crore. Key highlight from our analysis, apart from changes in the direct and indirect taxes, includes launch of a scheme for internship, opportunities for the youth in the top 500 companies of India as part of the Union Budget 24-25. Finance Minister said that this scheme will be implemented over the next 5 years and is expected to benefit 100 million youths in India. Interns will receive a monthly stipend of rupees 5,000 as a one-time assistance and a one-time assistant of rupees 6,000 rupees. The companies will bear the cost of training and the intern via the corporate social responsibility, that is CSR. Now let's talk about most awaited section, that is taxes. The government has introduced several changes in both direct and indirect taxes. For our professional friends, this section is crucial. The keyword for tax reforms this year is simplification. And friends, you understand, sometimes simplifications make it more difficult for compliance. First, the direct taxes. Let's discuss what PM has to offer on the direct tax. FM announced review of income tax 1961, and same is proposed to be completed in next 6 months. So by January next year, we can expect a first draft of new income tax bill, and this is a welcome step. The two tax exemptions regime for charities will be merged into one. Clause 8 of the proposed finance bill seeks to insert section 12AC in the Income Tax Act relating to merger of charitable trust or institutes in certain cases. Proposed new section empowers the board to make rules to specify the condition for the purpose of merger. 5% of TDS on many payments to be merged into 2% TDS and 20% TDS on repurchase of units by mutual funds or UTI stands withdrawn. TDS rates on e-commerce operators reduced from 1% to 0.1%. A comprehensive list is section 194D, payment of insurance companies other than insurance commission other than companies reduced from 5% to 2%, and this will be effective from 1st April 2025. Section 194DA, payment in respect of life insurance policies 5% TDS reduced to 2% and will be effective from 1st of October 2024. Section 194G Commission on Sale of Lottery Ticket, 5% TDS reduced to 2% will be effective from 1st October 24. Section 194H Commission on Payment of Commission on Brokerage, 5% TDS reduced to 2% and effective from 1st October 24. Section 194 IB Payment of Rent by certain individual to HUF, 5% reduced to 2% effective from 1st October 24. Section 194M Payment of certain sums by certain individuals or HUF, 5% reduced to 2% from 1st October 24. 194O Payment of certain sum by e-commerce operators to e-commerce participants, 1% reduced to 0.1% effective from 1st October 24. 194F is proposed to be omitted from 1st October 24. And then there is a very interesting section introduced is section 194T, where partners' remuneration, commission or interest paid by the firm, the TDS liability comes on it at the rate of 10%. This is the new section that will become implemented from 1st of April 2025. Now, personal income tax. The budget 2024-25 increased standard deduction of salaried employees from rupees 50,000 to 75,000 for those opting for new tax regime. Similarly, deduction on family pension for pensioners enhanced from 15,000 to rupees 25,000. Assessments now can be reopened beyond 3 years up to 5 years from the end of year of assessment only if escaped income is more than 50 lakh rupees. The new tax regime rate structure is also revised to give a salaried employees benefit up to 17,500 in income tax. The new income tax slabs are now 0 to 3 lakh rupees tax rate nil, 3 to 7 lakh rupees tax rate 5%, 7 to 10 lakh rupees tax rate 10%, 10 to 12 lakh rupees tax rate is 15%, 12 to 15 lakh rupees tax rate is 20%, above 15 lakh rupees tax rate is 30% as it was earlier. We were expecting to give some benefit for income slab more than 15 lakh rupees, but this is still at 30%. The government in this budget has proposed to abolish angel tax for all class of investor, and this is a welcome step. Further, a simple tax regime for foreign shipping companies operating domestic cruise is proposed, looking at the tremendous potential of cruise tourism in India. Foreign mining companies selling raw diamonds in countries can now benefit from the safe harbor rate, which will benefit the diamond industry in India. Further, the corporate tax rate on foreign companies reduced from 40% to 35% to attract foreign capital in India. Finance Minister has proposed major changes in capital gain scheme this year. The short-term capital gain since henceforth attract a higher rate of 20% on certain financial assets. Long-term assets on all financial and non-financial assets to attract 12.5% rate without indexation. For example, we need to understand this, that indexation has gone and what will be the impact of this change. For example, if we sell a property acquired on or before 2021, whose market value is 1 lakh rupees, for anything more than 7.67 times, which means for more than 7.67 lakhs, new proposed rate of 12.5% will be beneficial for the SSC. But if you sell at any value less than 7.67 times, earlier rate of 20% with indexation would have been better. So we need to understand that indexation has gone and the rate on long-term capital gain has reduced to 12.5%. Limit of exemptions of capital gain has increased to 1.25 lakh rupees per year to benefit lower and middle income class. The listed financial assets and for more than a year, and unlisted assets, financial and non-financial, held for more than 2 years to be classified as long-term asset. Unlisted bond and debentures, debt mutual funds, and market-linked debentures will continue to attract applicable capital gain rate. Now let's look into significant changes in GST. All these changes, or majority of these changes, are based on the GST Council's meeting, the last GST Council meeting that we had. The insertion of Section 11A, a new section empowering the government to waive the recovery of GST not levied or short levied due to general prevalent practice in the trade. The next is change in Section 13, addresses the time of supply for services where the invoice is required to be issued by the recipient in case of reverse charge situation. It is more of a regularizing the practice that is in play. Amendment in Section 16. This is important. The insertion of subsection 5 and subsection 6 in Section 16 provides exception to the existing rules, allowing registered person to avail ITC for the past financial year 2017-18 to 2020 and 21 under specific conditions till 30th November 2021, and this is welcome step to reduce the ongoing litigations. Insertion of Section 128A, a new section introducing a controversial waiver of interest and penalty for demands raised under Section 73 of the financial year for the financial year 2017-18 to 2019-20, provided the taxpayer pays the full amount of tax due. Amendment to Section 140. The amendment allows the availment of transition credit for input services received by an input service distributor before the appointed date, whether the invoices were received prior to or after the appointed date. Next is amendment to Section 171, which relates to anti-profiteering. The insertion of proviso and explanation to Section 171 empowers the government to specify the date from which the authority will not accept application for any anti-profiteering case. Next is amendment in Schedule 3. New paragraph in Schedule 3 clarify that the activity of apportionment of co-insurance premium by the lead insurer to the co-insurer and services by the insurer to the reinsurer will be treated as neither supply of goods nor services provided certain conditions are met. Insertion of Section 74A. One of the most significant changes is the introduction of Section 74A, which deals with the determination of tax not paid, short paid, erroneously refunded, or input tax credit wrongly availed or utilized for any reason from the financial year 2024-25 onward. Unified approach. Section 74A consolidates the approach for dealing with discrepancies irrespective of fraud, simplifying the procedural aspect. However, now the fraud and non-fraud cases will be treated with the same approach, which is not beneficial for bona fide taxpayer. Now let's understand due date for issuing notice with the help of an example. In the context of GST regime in India, the due date for furnishing final annual return, that is GSTR 9, for a financial year is typically the 31st December of the following 31st December following the end of that financial year. However, this due date can be extended by the government through notification. Now let's use a specific financial year for an example. Financial year 2024-25. The end of financial year is 31st March 25. Due date for annual return GSTR 9 would be 31st December 25. According to Section 74A subsection 2, the proper officer shall issue the notice within 42 months from the due date of furnishing the annual return. Calculation of 42-month period ends on 31st December, 30th June 2029. Let's calculate it again. Calculation of 42 months starting from 31st December 25 is 30 June 2029. So the department can issue notice under 74A up to 30th June 2029. Now custom duties. The custom duties have been revised to regularize, rationalize and revise them for ease of trade and reduction of disputes. Giving relief to cancer patients, budget fully exempt 3 more cancer treating medicines from custom duties. There will be reduction in basic custom duty BCD on X-ray machine tubes and flat panels detectors. BCD on mobile phone, printed circuit board assembly, PCBA and mobile charger reduced to 15%. To give a flip to processing and refining of critical minerals, budget fully exempt custom duty on 25 rare earth minerals like lithium and reduced BCD on 2 of them. The budget also proposed to exempt capital goods for manufacturing of solar panels. To boost India's seafood exports, BCD on broodstock, polycastle worms, shrimps and fish feed reduced to 5%. Budget will foster competitiveness of Indian leather and textile articles to export. BCD reduced from 7.5% to 5% in MDI and textile articles of export. BCD reduced from 75% to 5% on MDI using manufacture of spandex yarn. Custom duties on gold and silver reduced to 6% and platinum to 6.4%. BCD on ferronickel and blister copper removed, while BCD on ammonium nitrate increased from 7.5% to 10% to support existing and new capabilities in pipeline. Similarly, BCD on PVC flex banners increased from 10% to 25%, considering the hazard to environment. To incentivize domestic manufacturing, BCD on PCBA of specific telecom equipments increased from 10% to 15%. That's summary of the latest Union budget. In conclusion, the Union budget presents a comprehensive roadmap for economic growth. For practicing advocates and chartered accountants, it is essential to stay updated with these changes to advise clients effectively. For SME business owners, the budget offers the new opportunities and support mechanisms to grow your business. We hope this detailed analysis has been helpful. If you have any queries, questions, or need further clarification, feel free to drop them in the comment section below. Don't forget to like, share and subscribe to our current channel for more updates and expert analysis on the economic policies. Thank you for watching and see you in the next video. Thank you. Bye bye.